As oil prices are currently surging, we are also seeing bullish developments happening here to natural gas with this recent invalidation of this falling wedge. We've seen that bullish breakout here to the upside, as we've seen that divergence happening here with natural gas moving down and cumulative volume delta moving up. And so that beautifully shows you that bullish aggression is actually currently regaining some strength again. And so we do have this resistance level here at around $3.6. And we're also having this support here at $3.2. And it seems like we're currently moving to this support and retest it once again. Because obviously we are currently having massive supply disruptions. We are having a look at the geopolitics, at the fundamentals, and at the macroeconomics in today's video to really understand the underlying drivers that is driving this commodity, that is determining whether we're about to see a long-term bullish or a long-term bearish trend actually unfolding here right now. So if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't only support us here for our work on YouTube, but also don't miss the next few videos. Thanks for your support. Now let's have a look at the geopolitical events that are currently occurring here in the Middle East. We do obviously have the closure of the Strait of Hormuz. This is a really important choke point for natural gas trade. In fact, we do see that around 1/5 of global liquefied natural gas is transiting the Strait of Hormuz. In fact, this was the case here in 2024. And this is primarily coming from Qatar. And so we do not only see the closure of this strait right now, we're also actually seeing that those production facilities, for example, here in Qatar, are currently under attack. They are currently bombed and destroyed. And so we are obviously seeing massive supply disruptions. And even though obviously only 83% of liquefied natural gas is actually shipped to Asia, so Asian markets are really impacted the most right now, we do obviously also see those developments currently at the European and American prices concerning natural gas. And so concerning the geopolitical events that we are currently seeing, that is obviously bullish. We do not have to discuss that. But where it really gets interesting at this point is what we are seeing with the last few cycles, because history is always repeating itself. This is an event that is certainly not new to us, and so we do really understand those cycles even more. Let's take a look at the weekly chart here, and let's have a look at natural gas to really understand whether this is actually about to happen again, whether we're about to see history actually repeating once again. And so what you can beautifully see on the chart right here is the weekly of natural gas and the copper to gold ratio, the gold to S&P ratio, and also the DXY. And what you can beautifully see is that we do tend to see divergences happening between natural gas, that is moving to the upside, and the copper to gold ratio, that is moving to the downside, before massive crashes occurred. For example, here with the great financial crisis, and many other instances are beautifully shown here on this chart, where we've seen those divergences happening that ultimately led to lower natural gas prices. For example, also here with the COVID crash, after the 2022 bull market, so many instances where we've seen history actually repeat. Now, this is obviously logical because you tend to see that copper starts to underperform against gold in times of economic stress. And so this ratio starts to slowly move to the downside as we are still seeing inflationary effects on natural gas. And so we like to add to that we also tend to see gold actually not only outperform copper, but also the S&P 500. So this ratio is going to the upside. We've seen that happening before this crash, for example, happened here in the great financial crisis. We tend to see this outperformance happening whenever we do see a shift from risk on to risk off environments. And we've also seen that actually precede many crashes that we've seen happening. And it's a beautiful indicator to actually understand the market sentiment. And so the last indicator here is the DXY, and it also beautifully shows you whether we're currently having a weak or strong or restrictive monetary policy. and we tend to see a spike to the upside as those crashes occur. Now, we've all assessed those data points, we've all assessed these indicators right now, and so it's really important to take a look at what's currently happening. And what we are seeing here is, again, a divergence happening between natural gas and the copper to gold ratio. Again, this divergence here between the gold and the S&P ratio, or not a divergence in this case, but certainly this ratio moving to the upside once again, as we've seen it happen so many times throughout history. And so this is also indicating this shift from this the beginning of the cycle to the end of the cycle. In the end of the business cycle, in the end of the liquidity cycle, we tend to see gold actually outperform the S&P, and that is what we've seen now for years. And this is beautifully showing you the transition in which we're currently in. And lastly, we have to take a look at the dollar, which also starts to strengthen. Now, you may ask, why is the dollar strengthening? Well, we tend to see that if liquidity conditions are weakening, if you do see them being tighter, and if you do see those stocks being sold, if you tend to see those people actually moving out from those risk on into those risk off assets, you tend to see that the DXY is actually weakening, strengthening, because it's just the deflationary nature of the crashes that we've seen. You can beautifully see we've seen that deflationary environment here in 2008. We've seen all of those spikes here to the upside, as we've seen bear markets happening to natural gas. And in fact, we are also currently seeing the first developments of that here at the DXY. And now, to put it all together, we believe at Chronos that even though we do have this short-term price volatility due to the Gulf War, to the current war that we are seeing in the Middle East, we do believe at Chronos that this short-term move to the upside is certainly limited in time, because as we've just assessed, we do have seen many instances where we've ultimately seen those inflationary booms lead to deflationary busts. And certainly a sell-off might be overdue here at natural gas as well. We believe this certainly has some time to play out. We could see this continue. In fact, this is our primary scenario, that we do see this continue for quite a while, but just as long as equities are able to be stable. And if we do see crashes happening now to equities, to metals, then we do believe that oil prices are just also deemed to sell off, specifically natural gas and oil prices. And that is our thesis. We do believe we do have short-term upside potential, but long-term downside potential. We are short-term bullish, long-term bearish concerning the next few years, concerning the fact that we are having history currently being repeated. And so if you like this approach, of taking a look at those past cycles to learn from them, please make sure to subscribe to our channel, like the video, and also don't miss to ask a comment down below or just give us your opinion. You can also check out our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.